I'll give a brief introduction to Spring Activator and to Pique Ventures, the fund. I'll give an overview of integrated investing and a brief recap of what we covered in Webinar 1, but we will be covering a different topic today, namely integrated decision making. So Spring Activator is the activator for purpose-driven companies. We're focused on building for-profit, impact-oriented, purpose-driven ventures. We're looking to build the next Kickstarter, Kiva, or Whole Foods or Tom's Shoes. We're based in Vancouver, BC. Pique Ventures, which is short for Pique Venture Investments BCC Inc., is an early-stage impact venture fund. And the fund's focus is on leadership diversity and two particular sector areas, productive creative businesses and social technologies. Spring and Pique Ventures work closely together. The easiest way to think about it is where Pique Ventures is building the investor community. Spring works closely with entrepreneurs. This webinar is a preview of some of the content from one of our courses, Integrated Investing Intensive, which is comprised of one full day or 2 evening sessions. And it's designed for entrepreneurial leaders or working professionals who want to lead with their investment dollars and invest with impact. And integrated investing was born out of the question of how can we achieve different outcomes when we make investment decisions the same way we had been for decades. And this really evolved from my own experience, both in investment banking and in impact investing. You know, a lot of my colleagues were wanting to derive both financial and social outcomes. Yet the investment decision-making processes that they were using were pretty much the same as what I had seen in conventional investment banking. And so integrated investing is for a number of different people. It is applicable for people with personal savings who want to be more in the driver's seat of their personal finances and just more knowledgeable and in control when they're talking to their financial advisors. It's also for people who want to invest in private ventures. And one of the benchmarks that I use is people with at least $15,000 or more to invest in private ventures that they want to do so in an impactful way. Integrated investing is also for people interested in impact investing but don't know where to start. Or it might be for people who have been investing but really are looking for a more holistic approach to investment decision making. Integrated investing is also for people who are new to investing in general and want to do it in a way that is interesting, is fun, and actually embraces all parts of their self, not just their analytical side of their brain. So to give an overview of integrated investing answers four big questions. The first is, what is impact? And that was covered in the first webinar, the major impact concept that I call access to essential resources. Second big question is, why do we invest in the first place? And so integrated investing explores the motivations of the integrated investor. The third question is, what should I invest in from a big picture point of view? And this is really the question about, if we're going to invest in impact, what does that mean in terms of a macro level? And then the fourth question is really at the micro level. How do I determine if a particular opportunity is good for me? Should I invest in that? And so integrated investing also includes tools for actually deciding if a specific opportunity is a good fit for the integrated investor. Today's webinar is focused on integrated decision making, which is one of the questions, which is a tool for answering one of the questions around how to determine if a specific opportunity is a fit. So just a quick recap from webinar 1. And the first webinar was recorded as well. Here's the short link for that YouTube video. But just quickly, why the concept of access to essential resources? It was evolved from my own observations of how impact investing funds were directing themselves. And a lot tend to focus on very specific impact areas like food security or economic inclusion. But really what I was finding that it was specific and some people weren't having their own impact goals met. And so access to essential resources is designed to be an inclusive approach to identifying impact areas so that certain areas which are important but maybe not obvious don't get overlooked. Access to essential resources is also a way of identifying and communicating impact in a way that's more comparable without having to reduce everything to numbers. And it brings everything to a common language of access to resources. Linking impact to essential resources, and I'll mention in brief what those essential resources are, connects us to the things that we need to survive and thrive in life. It's not so much a philosophical focus on hierarchy needs, but it's really just an observation of, here are 6 areas where we need resources to function in day-to-day life. And lastly, access to essential resources also focuses on the type of access and improvement in the type of access. And that improvement really connects impact to some kind of change or betterment and ultimately to reducing inequality. So really briefly, the 6 areas of essential resources that I touched upon in the first webinar are sustenance, things like food, water, and shelter; expression, because we all want to express ourselves either through writing, music, art and culture; connection, because we have the desire to connect with other people, and that's what things like telecommunications, meeting places, and even transportation are for. Those are resources for connection. We need resources to manage change. And in that category, financial services and insurance and even some forms of information help us manage the changes that we experience in life. The 5th essential resource is the area of making decisions. We need information. We need education and know-how to be able to make decisions. And lastly, means of exchange. The primary, most common form is money, but if we have goods that we can barter or alternative currencies, those are also means of exchange, so we can trade for the various other resources that we need in life. And very briefly, the 5 types of access are basic, efficient, choice, convenient, and luxury. And most impact ventures focus in the areas of basic, efficient, or choice. Impact areas that work in the areas of serving bottom of the pyramid populations really are focused on basic access to essential resources. But a lot of other things that we see might be providing efficient or choice of access to resources. Even ventures that provide convenient access to resources for most of us can also incorporate some other type of access to resource to another stakeholder group. Luxury is probably the least common, but there are actually impact ventures that provide a luxury product, but also provide access to resources either through employment or through the supply chain. The other topic I covered in the first webinar was why we invest in the place. And just very briefly, investing actually gives us access to essential resources. Investing is a way for us to express ourselves, to connect with others, and also to manage change. It's more than just financial return on investment. These types of motivations, be it status, power, legacy, or innovation, are actually the key drivers, and the financial return on investment is actually a consequence of these other motivations. So that brings us to the topic of today's webinar, integrated decision making. The concept of integrating analysis, emotion, body, and intuition into our decisions, or colloquially, integrating head, heart, body, and soul. And why do this? Because we are human, and these are actually all 4 inputs factor into our decision making. Yet in investing, there's greater emphasis on analysis and less of an appreciation of how emotion, body, and intuition affect our decisions. So the different areas, analysis, emotion, body, and intuition, there are different ways of asking questions to draw out the information from those areas that would inform our decisions. And I'll just go through some of them briefly here. So analysis is useful. I mentioned here, traditional investment methodology relies heavily on analysis. How can we compare? How can we measure? How can we reduce everything to a number to make it easier for us to decide whether something is good, bad, or better? Analysis is useful. It helps us narrow down our field of options. It does make things more comparable. And, what I've noticed is at the end of the day, analysis and numbers do make us feel better. If a particular measure is the higher the number, the better, that's a useful measure for us to compare, like, is this good or bad? There is actually an emotional response to analysis, which is kind of ironic. But the challenge with analysis is that it really is only as good as the assumptions we make. We still have to provide other inputs into it, which are not finite, which are not complete, and not necessarily foolproof. So analysis has its gaps as well. So how do we fill in those gaps? Emotion, in fact, is actually a key input that helps us make final decisions. There's quite a significant amount of research around the neuroscience of how emotion affects our decisions. Some of the most famous research actually comes from a neuroscientist named Antonio Damasio, who studied patients that had the part of their brain that controlled emotions. That part of the brain was damaged. And so what those patients were left with were very, very extreme logical thinking and decision-making. And what Damasio found was the absence of the capacity to feel emotion actually made it difficult for those patients to make decisions. They could analyze and be rational and logical about things. The example he used was one patient trying to choose whether to eat at a particular restaurant. And you can go through all the facts, but when you get down to the end, the absence of emotion made it very difficult for that patient to actually choose. There wasn't anything that could tie break or help him get off the fence. And so emotional preferences actually enable us to choose amongst rational options. When I mentioned here, risk and impact are personal and emotional. It's a curious thing because we actually try to measure risk, we try to measure impact, yet they are inherently emotional things. We have emotional reactions to risk and impact. And so rather than leave emotion out of the decision, we'll do much better by developing more awareness of our emotions and how they affect our decisions. And in some cases, maybe we need to make a different decision in the face of fear, for example, or maybe we need to pay attention to how strongly we feel about something and let that actually help guide our decisions. Body is the third input. And there's various different ways that body affects our decisions. Some of it has to do with our actual physiological responses. For example, if we are hungry or thirsty, that's going to affect our immediate decisions. We will look for something to satiate our hunger or quench our thirst. It might actually also affect our decisions in different ways in that if we're starving or we're tired, we will likely make decisions in a very different way than if we're well-fed and well-rested. There's some basic physiological responses which connect inputs from body to basic physiological instinct. However, what's more subtle is our body can also give us signals of our emotional and intuitive responses to choices. And that takes some practice to develop the awareness of what different signals our bodies are giving us. For example, when I'm experiencing something, either if I'm having a negative response to something, maybe a little bit of stress, I actually feel tingles in my arms. When something is really positive and I'm actually getting almost like an intuitive response to something, I feel it at the back of my neck. But this has come from practice and a awareness building over time of what those different signals mean. Another interesting trick that we can do to influence how our body affects decisions is our actual body position. And I've put a link here to a short link for Amy Cuddy's TED Talk about power poses. Our physical stance can actually affect some of the hormonal levels in our bodies. For example, adopting a power pose can actually lift the level of testosterone in us, which then has an effect of enabling us to take more risk. There's a study by John Coates, another neuroscientist, who saw that Wall Street traders that were making particularly risky trades had elevated testosterone levels. And so the good news from Amy Cuddy's research is that we can actually, if we want to take more risk, let's say we're feeling particularly risk averse, but we actually want to make a change and take a chance, we can actually adopt a power pose to stimulate testosterone levels in our own bodies. So there's some really interesting inputs that come from the body that affect our decision making. And lastly, and probably the most subtle of them all, is intuition. And why do we need intuition? Well, especially in trying to make a decision about something that's going to happen in the future that hasn't happened yet. So how do we do that? We can't analyze things that haven't happened yet, and there's no such thing as a future fact. And so what we've seen time and time again, that people have made decisions in the absence of certainty. And the word that I put to that is intuition. And I make the distinction that intuition isn't habit or acquired knowledge. I would say that that's analysis. A lot of people also mistake intuition for fear or prior experiences, but that's really more an emotional input. Intuition instead, I would say, is a synthesis of many things. It does require letting go of the known. You know, some of the theories out there about intuition is that it's the fast processing of information and analysis that's available to us. But the key piece, it's the thing that we can rely upon that enables us to leap into the future, make a decision in the face of uncertainty, but with confidence. Different people have different words to describe what intuition is. Might be a hunch, might be an insight. You know, some people say it's little whispers at the back of their minds, or it might be some kind of niggle that they just can't let go of. Whatever it is, there really isn't enough research on how intuition works. It is a very long horizon because you need to sort of work out when that intuitive decision or hunch was made and track into the future whether it was the right decision. But I know from my own experience of making decisions in the face of uncertainty that there is something called intuition that we need to rely upon to make decisions in the face of the unknown. And so some of the exercises that I go through in integrated investing on these last three inputs. As I mentioned, analysis is one of the key tenets in traditional investing. And it's inputs from emotion, body, and intuition that are really underutilized, but so important and informative, in particular to impact investing. And some of the ways to develop greater awareness of how our emotion, body, and intuition affect our decisions are through things like meditation, self-reflection, mindfulness, and also trusting that those inputs are valuable inputs to the decision-making process. And to give you an idea of the other concepts and topics that are covered in integrated investing, as I mentioned, I do cover in greater depth the impact concept of access to essential resources, as well as motivations for investing. I also talk about other concepts, in particular the big elephant in the room of inequality and why impact investing is important for leveling the playing field. And there's also a concept that I described as taking care of the village, investing as taking care of the village as opposed to as a game. I also talk about things like how values, mindsets affect our decisions. And I also offer practical tools, the Integrated Investing Toolkit, which is called integrated because it combines both traditional evaluation tools that are useful, sort of the best practices from traditional investing, alongside what I call contemporary evaluation tools, things like the business model canvas and 7 domains model, which were developed for venture development, but are actually very useful when turned around from an investor to be used from an investor perspective. Point integrated into the toolkit are some impact tools, practical applications of some of the concepts I mentioned earlier. And the last piece of integrated investing is it really helps walk investors through the actual activity and experience of making an investment. What does it look like to build the investment relationship? What does it look like when you meet with an entrepreneur and hear their idea or pitch or their venture description? A little bit of role play in subsequent courses, but really helps an investor experience what making an investment is like. So we do have 2 upcoming dates. The next offering of integrated investing is this Saturday. It's a full day course running from 9 to 4 in Vancouver. We also offer evening sessions, so 2 consecutive evenings on May 7th and 8th. If you're in the Vancouver area, there's more information on those courses at on our website at spring.is/intensives. And that brings us to the end of our second webinar on integrated investing, introducing the concept of integrated decision making. Thanks very much.